following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Yep, that's me, Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. Now 5 days a week from 3 to 4 Eastern, just in front of the Tom O'Brien Show, which goes from 4 to 6 every day. The number to use to get through, talk to me about this market, 877-927-6648. If you can't listen to the show live, no worries. You can pick it up as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in 8 letters, TFNN.mobi, TFNN.mobi, and you can listen to the stream that way as well. If you want to look at the charts that I'm going to be looking at on the show, you can use Tiger TV to do that. If you're listening on your PC, go to TFNN.com. Tiger TV is, the show is carried live on Channel 1, and it is archived on Channel 13. All right, well, market is as deviant as ever. Tom and I have been joking about this deviant market for some time. It was a deviant session for stocks last Friday. Everybody's on vacation, not paying too much attention to the markets, and what do we have? Big percentage gains. IBD goes ahead and calls it a follow-through day. They think that a near-term bottom has been put in. You get a higher volume decline by the NYSE composite on Monday. Whether or not that was distribution remains to be seen. I mean, I was a little skeptical of it, but yesterday we did get a higher volume decline for all the major averages. So no matter how you slice it, anytime you see distribution or higher volume declines very soon after a buy signal from the market, that is reason enough to tread cautiously. What happens today? Well, we had the Dow down by as much as 113 points today. It is firmly in positive territory, trading near its session high. The S&P 500 was down by as much as 1%. It is now trading up close to 6 points, 0.4% to 1404. We're looking at a chart right now of the S&P 500. See that it recently climbed above its 200-day moving average, touched its 200-day line today, and then bounced. It is at its session high. The NASDAQ Composite, similar price action today. It was down by as much as 1.1% today. It is trading up near its session high, but look at this 200-day moving average here. Will it be a ceiling or will it not? The better volume we have to the upside, the better chance the NASDAQ Composite is going to have to retake its 200-day moving average, which is currently around 2986. NASDAQ right now up close to 14 points to 2981, so it's about 5 points underneath its 200-day moving average. After that, next level of resistance is going to be its 50-day moving average, which is up around 3030. So NASDAQ Composite still has some overhead supply to work through here, but I have to say, so far so good. We had confirmation of a new uptrend last Friday, follow-through day on the 5th day of the rally attempt. Yesterday's bearish section, you had Senate Majority Leader Harry Reid come out and say that wasn't happy with the progress that's being made in these fiscal cliff talks. That fueled a pretty nasty sell-off late in the day. Higher volume declines for all the major averages. And then, of course, when I was joking with somebody even before the market opened today, I said, something tells me we're going to hear some good news out of Washington today. What happens? Well, John Boehner comes out and says that he's optimistic about a deal, and then the Wall Street Journal reported that Democrat Erskine Bowles said the White House was flexible on the level of top tax rates. So you get a couple of positive headlines coming out of Washington, D.C. That caused indices to turn off their lows, and here we are up at session highs. Can the move be trusted? it's just very, very tough right now. Headline-driven market. You don't know what's going to come out of Washington. Great headline one day, bad headline the next, back and forth action. What I know right now is that the market is in an uptrend until proven otherwise. I've initiated positions in 4 new names for my Ultimate Growth Stocks model portfolio over the past 7 to 10 days or so. I'm very happy with 3 of them, and the other one is back to about break even and is showing suspicious price action. So 3 out of 4 are working. I'll take those percentages for now. But again, I am concerned about the market's action yesterday, and today's action just tells us what we already know. We're in a volatile market. We're in a headline-driven market. But again, we did get a mild buy signal on Friday, so far so good. At least when it comes to the NASDAQ Composite, that 200-day moving average looks like it could be resistance for now. Volume today on the NASDAQ tracking a little bit lower than what we saw on Tuesday. NASDAQ volume on Tuesday was 1.7 billion shares. We're tracking about 5% lower than that. Right now, volume Tuesday on the New York Stock Exchange was average at 683 million. We're tracking very close to that right now. So not exceptionally big volume in the market today, pretty much on pace with what we saw yesterday. The yield on the 10-year note down for the 3rd straight day to 1.62%. The 30-year bond down for the 4th straight day to 2.78%. U.S. dollar index under a little bit of pressure today, but not by much, down 5 ticks to 80.35. Gold down $25.80 to $1,716.50 an ounce. Check in on the GLD, the Spider Gold Trust. We'll see that it made a brief attempt Friday during the strong market rally to get back above its 50-day moving average. It fails miserably, down Monday, down Tuesday, and then the bottom really falls out today. A lot of juice behind this downward move for the GLD. It is down 1.3% to 166.54. Support level right now for the GLD looks to be around 161.5, so it's got another 5 points to get down to its 200-day moving average. Oil down for the 3rd straight session, $86.49 a barrel, down 69 cents today. Earlier today, the U.S. Energy Information Administration, EIA, reported an unexpected decline in crude inventories for the week ended November 23rd. Last week, Thanksgiving week, crude supplies fell by 300,000 barrels. Analysts polled by Platts expected an increase of 500,000 barrels. So unexpected decline in stocks reported by the EIA, and that's where we're at. We had some economic data today. The Fed Beige Book came out just a little over an hour ago. Among the highlights, weak factory activity due to concerns about the fiscal cliff. Other highlights in the Beige Book said that the overall economy is growing at a measured pace. Don't forget, we've got GDP data tomorrow. What's interesting is we're going to get the second estimate to 3rd quarter gross domestic product. The first estimate was growth of 2%. This time around, it's expected to increase to 2.8% growth. So that's not too bad. Still below the 3.5% with is what typically the economy grows at in a healthy economy. But if we come in near that 2.8% number, that's not too bad. Other highlights of the Fed Beige Book: U.S. labor market is improving modestly. The consumer is spending at a moderate pace. Retailers are upbeat about the holiday shopping season, and price pressures are modest. And from what we've seen, recent inflation at the wholesale and consumer level, that does appear to be the case. We also had new home sales data today for October. Disappointing, actually. They came in lower than expected at 368,000 units. The estimate was for 20,000 more. The estimate was for 388,000 units. September new home sales were revised lower to 369,000 from an initially reported 389,000. Got 2 ETFs here that track the housing market. The ITB is the Pure Play Home Building Fund. It is down 12 cents today. You can see it drop down to its 50-day moving average, touched the line, maybe went a little bit below it, and now is back up near its session high. Still down 12 cents to 20.45. And then the other home building fund here, which is not a Pure Play Home Building Fund. This has stocks like Home Depot, Lowe's, Whirlpool. It's got a few home builders in the top 10 holdings, but the Spider S&P Home Builders Index ETF, it is down 8 cents today to 26.14. Similar to the ITB, the XHB came down to its 50-day moving average, bounced, and is now trading near its high for the day, but still down about 0.3% to 26.14. That is a look at the economic data for today. Don't forget, tomorrow, weekly jobless claims. The estimate is for claims to fall 15,000 to 395,000. Mentioned the second estimate to third quarter gross domestic product, expected to come in at 2.8% growth. And then we also have pending home sales for October, Friday, personal income and spending, and then a look at the Chicago Purchasing Managers Index. Special dividends have been in the news yesterday. Remember, Brown-Forman, Las Vegas Sands, Dillard's all announced special dividends. Today it was Costco. Let's check in on shares of Costco. Big move for the stock today. Really just building the right side of its base here. Big move, solid move, up 6% to 102.35. So solid move, trading up near its session high. Costco declared a special dividend of $7 a share, payable December 18th to shareholders of record December 10th. Costco also said that same-store sales rose 6% in November. They rose 6% in the U.S. and 7% internationally. So Costco looking pretty solid here. Good day for Costco. Let's check in on shares of Groupon. Obviously not a great stock, but it is in the news today. There's a board meeting coming up Thursday at Groupon, and there's talk that some board members are not happy with the current direction of the company under CEO Andrew Mason. There's talk that he may be out as CEO. That is not the case yet. He is still CEO of the company, but there is a board meeting on Thursday. Remember, Groupon went public in November 2011. A little more than a year ago at $20 a share. It is now trading around $4.29. It is up 8.3% on the day over speculation that Andrew Mason may not be much longer for the job. Remember that Google, I'm not sure when it was, but Google at one point tried to buy the online deals company for $6 billion. Groupon's market cap has been sliced in half. It is now around $2.7 billion. So tough times at Groupon. So you can see here the daily chart, the stock has rallied off its lows, but still a very broken stock. Lots of earnings reports to get to. We'll do that when we come back from our first break. Lots to talk about as usual on Breakout Investing. Ken Shreve with you. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Major averages have bounced nicely off lows, and they are holding gains nicely. The Dow right now up 76 points, near its session high to 12,954. The NASDAQ Composite up 13 points to 2981, and the S&P 500 up a little more than 6 points to 1405. So still very difficult to discern market direction here. I was talking to a few people earlier today on the phone, and seems like it's just as easy a market to be short as it is to be long. I wrote in my newsletter, I think it was this week, it might have been last week, that it's just, I really don't feel like I have an edge being long this market, and I really don't feel like I have an edge being short this market. And when you're in a situation like that where you're really not sure what to do, and the market is just kind of head faking you, and you're not seeing a whole lot out there to buy, and the short setups seem to be equally matched with the long setups, it's generally a good idea not to do much of anything and just to sit on the sidelines and wait for more clarity, because the visibility is still very cloudy out there. Again, when it comes to the fiscal cliff, which is clearly the market's focus right now, it is fixated on headlines out of Washington. I can guarantee you that you're going to get negative headlines one day and positive headlines the next, and negative and positive back and forth, and it's just going to be cloudy and confusing. I'm still optimistic that some sort of deal is going to get done. Not too many people are, and I can understand that, but because I'm optimistic about a deal, I'm also optimistic that this rally that was confirmed last Friday could have legs. I'm not married to that position. Again, I'm seeing a lot of growth stocks that have been running the past 3 years and are starting to look very, very tired. Their weekly charts tell me that lower prices could lie ahead. So the Ultimate Growth Stocks model portfolio is now set up to short stocks as well. So I'm open to short opportunities when they present themselves. Right now, I have 4 long positions on. If you want to see what stocks those are, you can check out 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com. You can check the breaking news section right on the homepage in red letters. It says try out Ultimate Growth Stocks, and that's one way to just see how I am navigating this market, which has been difficult. Also on the homepage of TFNN.com, folks, you're going to see our new Tiger Dollar promotion, where a portion of Tiger Dollar proceeds will be donated to the Salvation Army. So if you purchase Tiger Dollars, you can use Tiger Dollars to buy anything at TFNN.com. TFNN will donate up to 10% of your purchase price to the Salvation Army. You have to sign up by December 19th and get a 25% bonus match on any amount over $500. So all the details are right on the homepage of TFNN.com. Be sure to check that out. All right, wanted to check in on shares of Green Mountain Coffee Roasters. This stock is holding gains nicely today. It really surprised the market with a exceptional earnings report after the close Tuesday. They earned 64 cents a share. That was well above the consensus estimate of 48 cents. Earnings were up 36% from a year ago. Sales were up 33% to $946.7 million. The consensus estimate was for sales of $902 million. So that was well above expectations as well. Coca-Cola executive Brian Kelly will be taking over as CEO on December 3rd. The issue with GMCR is that some of their patents expired, their K-Cup technology. Some patents expired this year. Starbucks came out with their own single cup brewer, the Verismo. You've got Kraft with their own single cup. I mean, the single cup brewers are everywhere now. So are these K-Cup pods. And competition is definitely a big concern for Green Mountain. What you had here, as of November 15th, you had 51.5 million shares that were held short. That was more than double what was short about 6 months ago. So it's a big short squeeze today. Whether or not new growth fund managers are getting into this name, I tend to doubt it, because you have a stock that, definitely lost a lot of faith. They still have some accounting issues. I'm not sure if they've been resolved completely from the SEC, but there's still some overhang here. Certainly a lot of competition, daunting competition for GMCR, but give the stock credit for a very strong quarter. I suspect a lot of fund managers out there are probably going to say, show me another exceptional quarter, and then I might be ready to re-embrace a growth story here. But usually one quarter is not enough to mark a turnaround. Normally institutions want to see at least a couple of quarters of execution. So that's it on GMCR. Big move for the stock today, up 28% to $37.17. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Boy, stock's getting stronger into the close here. If you're a bull, you gotta like that. But you know, again, we've had some distribution in the market yesterday. When you see higher volume declines in the major averages so soon after a buy signal, even if it's a mild buy signal, it is reason to tread cautiously. But we know that we are in a volatile market here, a headline-driven market where it's easy to get whipped out of positions back and forth. Tough to be short, tough to be long. Right when you think the market's going to break down, it turns on a dime, just like today, and back up near highs. But right now we've got the Dow up 102 points, 12,980. NASDAQ up 22 points to 2990. All of a sudden, 3,000 looks like it's back within reach for the composite. S&P 500 up close to 10 points to 1409. We had some other bright spots in earnings today. Let's take a look at a company that you may not have heard of, but interesting company. Has always been able to deliver good earnings and sales growth. They're based in China, called Focus Media Holdings. What they do is they operate an advertising network in China comprised of liquid crystal displays, flat screen displays. You see them in subways all over China, but It's basically an outdoor advertising network, and earnings were up 20% from a year ago to 71 cents a share. That beat the consensus estimate by a penny. Sales up 23% to $256.3 million. That was mostly in line. And as you can see, Focus Media Holdings has been basically moving sideways since August, building a base here, holding above support. It's outperforming nicely today, up 2.8% to $24.44. And then PVH, which stands for Phillips Van Heusen, but the company is just known as PVH. A big day for the stock today, up 6.7% to $116.66, flirting with a breakout over a swing point here, so technically very healthy. The earnings were okay, up 24% to $2.34 a share, 4 cents above views. Sales were down 1% to $1.64 billion. That was in line. Sales at the company's Tommy Hilfiger business rose 1% to $833.6 million. Revenue at its Calvin Klein unit jumped 6% to $319.6 million. You might remember in October, PVH announced plans to buy Warnaco Group for $2.9 billion. That acquisition gave it full control of the Calvin Klein brand. So PVH acting well here. Technically a very healthy stock in this market, and again up 6.7% to $116.66. In retail, American Eagle Outfitters. This is a well-run company. Had been under quite a bit of selling pressure, but you can see it firmed up in its 200-day moving average. Shares gapped up today, up 7.2% to $20.79, trying to get back above its 50-day moving average. It has not been able to do it yet, but a big move for the stock today. Profit at American Eagle up 37% from a year ago to 41 cents a share, 2 cents better than the consensus estimate. Sales up 11% to $910 million. That was about 30 to 35 million better than the consensus estimate. So nice quarter from AEO. Not such a good quarter from TFM, the fresh market. This was a stock I had mentioned on the show. It was setting up on Friday when we got that follow-through day, mild follow-through day from the market, confirmation of a new uptrend. You actually had a mini breakout for TFM. It was under pressure Monday, under more pressure Tuesday. They come out with earnings earlier today. Stock is down 13% to $52.32. The fresh market came public in November 2010 at $22 a share, so it's still trading well above its offering price. The numbers weren't bad. They did miss earnings by 3 cents. 23 cents a share, was up 21% from a year ago. Sales, not too bad, up 22% to $321.5 million. That was about $2 million above the consensus estimate. And same-store sales, I didn't write it down here, but I believe they were up 5.6%. So the numbers weren't too bad, but the problem here was that their CFO is taking another job. And that news came out last night ahead of its earnings report. So anytime a CFO departs, it's always going to be problematic for a stock, and the fresh market taking a hit today. So this is a company whose growth story I still believe is very much intact. They should be able to grow annual earnings by 25-30% over the next couple of years. Big expansion plans, but clearly a broken stock at this point and out of Wall Street favor. Whole Foods Market. Let's see if the weakness in the fresh market is weighing on WFM. Like many other stocks, Whole Foods Market hit an intraday low of 89.42. It is back pretty much trading at its high here. Highs for the day as major averages get stronger into the close here. Whole Foods up 1% now to 92.29. This stock is one of these examples of a stock that I just really can't envision it being a market leader going forward, only because the stock is up some 700-800% over the past 3 years or so. You can see a huge price move for Whole Foods Market, and just look at its weekly chart here. Repeated resistance at the 10-week moving average. This is often problematic for a stock that has made a significant run like this. So even though it's having a decent day today, rallying back with the market for the week, Whole Foods is still down about 3%. Its 10-week moving average is at 95. It's at 92 right now, so another 3 points for it to get up to that 10-week moving average. It has been a resistance level in the past, and I suspect it will continue to find resistance there, which would even set it up as a short candidate. So that's my thoughts on the Whole Foods market. And one more earnings report today that was pretty good. Movado Group. Shares of Movado Group has been, stock has been in rally mode. It gapped up today, up 9% to 35.13. This company does watches. They beat earnings estimate by 6 cents a share. Profit of 67 cents was up 3% from a year ago. Sales up 12% to 160 million, about 5 million above estimates there. So Movado having a nice day as well. Checking in on the 3D printing companies. I'm a little frustrated that I don't own at least one of the names, 3D Systems or Stratasys, but you know what? When I am looking at a stock and identify a company with strong fundamentals, I'm very picky with the chart. And I learned how to be very picky with the chart when I first started learning how to buy growth stocks from Bill O'Neill, a lot of other people at Investors Business Daily. But I learned that you really need to be picky when you're analyzing price and volume. You're analyzing supply and demand in a stock. Now with 3D Systems, here you have a stock up another $3.39 today, 7.5% to 48.63. It's actually breaking out today over a swing point of 46.92. But the main issue I have with this chart, and if it's going to go up, it's going to go up without me. And you're not going to get every big winner, but if you're going to call this a cup with handle base, the correction in the handle area is 22%, and that is just too steep to be considered healthy. Not only that, but there's been a lot of distribution in the handle area here, a lot of higher volume declines, and a lot of the declines were a result of a short sellers report that the company's accounting may not be up to snuff. Earlier this week, 3D Systems refuted that. The market liked what it heard, so now you've got buyers coming back into the stock. It is a stock under renewed accumulation. Technically, it's strong, but I was just told when a handle area forms and there's heavy volume selling in the handle area, and the handle area corrects more than 15 or 20%, it's a flawed base, and the chances of it working are not very good. So that may or may not be the case with 3D Systems, but I'm going to take a pass on this one. The daily chart of Stratasys looks a lot better. The issue I had with Stratasys was this massive price decline here back in early November. I'm not sure specifically what day that was. Let me check it out, but it really plunged in heavy volume. Might have been the same day that this short seller raised questions about accounting at 3D Systems, but it was on November 2nd. You see a big percentage decline here, a lot of sellers in the stock. So you have a handle area that formed from that point, but it was a flawed handle area. So Stratasys broke out over 69.08. It is now at 78.40. And it's very extended now, so it's way too far past that buy point to consider buying. So on the one hand, I regret not being in at least one of these names, but you have to. When Stratasys first broke out, there was no volume in the stock, so I don't like to buy low volume breakouts. Volume eventually came into the stock earlier this week on Monday, but by that point it was already about 4.5-5% past that swing point of 69.08, and I just felt like I was chasing it. So we're not going to get them all, but the holdings that I currently have right now I do think have good potential, and I'm going to continue to look for long opportunities, especially as the market continues to strengthen into the close here. So that's where we're at with these 3D printer makers. Shares of United Rentals, another name we're watching here. It is firming up nicely at support. There were some fairly big sellers in the stock yesterday, but right now the stock is up 2.8% to 40.99. 40.99. Still keeping an open mind for a potential technical breakout for United Rentals over 43.13. That would be its swing point over here if you're watching in Tiger TV. So sellers in the stock quite a bit on Tuesday, but a nice bounce back after hitting an intraday low of 38.82. United Rentals up 2.8% to 40.99. So it's only about 2 points away from a breakout point. KCG, Knight Capital. Knight Capital gets a buyout offer from Getco Holding Company for $3.50 a share. KCG right now trading at $3.40, up 14.5% on the day. Low price stock here, but there were rumors that Knight Capital was in play. They do get an offer today from Getco Holding Company, private company that values the trading firm at $3.50 a share. FLT, we've talked about this one on the show before, FleetCor Technology. FLT, very extended. The stock has just done nothing but gone up. And I got to tell you, news of a secondary offering after a huge price run. Normally a stock is going to face a lot of selling pressure. That actually is not the case with FleetCor. It is trading in a very tight range today. It's only down 1% to 52.18. Again, considering the big move that it's made, actually a respectable day of price performance despite news of a secondary offering. When a company puts more shares out on the market, it can be dilutive to earnings, and that's why a stock normally goes down when it announces a share offering. I want to take a look at MSG, Madison Square Garden, because this looks to me, it's a good base forming here. You had a nice breakout recently, heavy volume move that was on November 16th, and volume was actually only average on that day, so it was kind of a low volume breakout. Sellers have been in the stock ever since, but I like the fact that volume is drying up here as the handle area is forming. This is what is known as possibly a high handle. You had a handle area form back in this area here, and a breakout over 44.27, but this is still a breakout candidate over 45. So Madison Square Garden is a stock that's definitely worth watching here. It's up 25 cents today to 43.52, but a breakout over 45 can't be ruled out in this name as well. So Madison Square Garden, another one to keep an eye on. Another short candidate here. Let's take a look at Mellanox Technologies. Still holding above its 200-day moving average here at 73.59. The stock is really getting hit hard today. No news that I could see. Big sellers in the stock, though, down 9.5% to 76.27. This is a stock that, if it does start to rally back, I wouldn't be surprised to see it meet with resistance at its 50-day moving average at 91. So it's still a good short candidate here. I'm not going to short after a big percentage decline like today, but let's take a look at the weekly chart for Mellanox. And the reason I think it's a good short is you can see it fell below its 10-week moving average back in this area here, September, and then it just saw some resistance at the 10-week line, came down to its 40-week moving average, tried to rally back, and is now meeting with new resistance at its 10-week moving average. So this is a stock that looks like it's in the process of breaking down. You can see a lot of distribution in the stock, all these big weekly declines in huge volume. So it is a stock that is under distribution. Looks like it's breaking down. Again, tough market to be short here, though. You can, if you do take out a short position in a stock, you have to be ready for this market and whipsaw back and forth action. So Mellanox looks like a good short candidate. Not ready to short it yet, but one to watch for lower prices ahead. Coming back for our last segment, we'll do a final check on the major averages when we come back. Thanks very much for tuning in, folks. Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Ken Shreve with you. Let's check in on the S&P 500. You're watching in Tiger TV. We'll look at the daily chart for the benchmark index, trading near its session high, up close to 10.5 points to 1409. S&P 500 touches its 200-day moving average early in the session when it was down about 1%, but it is back up pretty much at its session high. Next resistance level for the S&P would be its 50-day moving average here at 1423. So we'll see how that plays out in coming sessions. And the NASDAQ Composite here also trading up near its session high, now trading above its 200-day moving average. That is significant, trading at up 24 points, 0.8% to 29.91. So we get a close above the 200-day moving average. That would possibly bring a run for the NASDAQ Composite to its 50-day moving average at 3,030 into play. So bullish day for the market on last Friday, day after Thanksgiving. Big percentage gains in the major averages were confirmation of a new uptrend. How long it lasts is a bit questionable, a bit in question right now, because we did see unequivocal distribution in the market yesterday on Tuesday. And anytime you see a higher volume decline in the indices so soon after a market buy signal, that is reason to be a little bit cautious. So just trying on a few positions on for size here, see how they work. Like I said, 3 out of the 4 newly open positions for Ultimate Growth Stocks are working nicely. Charts still look good, so confident about that. Coming up after the close, earnings from Aeropostal, ARO, also Coldwater Creek, CWTR. This is a low-priced stock, but I'll tell you what, its relative price strength has been a sight to behold. Here's a look at Coldwater. And it is up. The stock is up 165% since hitting a low of $1.80 in late August. It is trading at $4.84 right now, up 3.6% on the day ahead of earnings after the close. We've also got earnings from Guess after the close, and Lazy Boy, LZB. Don't talk about Lazy Boy too much, but it's in a decent technical setup here, still holding close to a 52-week high, and looking at a swing point in Lazy Boy of $17.13. It is trading at $16.13 right now, down 1.6% on the day. Thursday before the open, Beacon Roofing Supply. Let's check in on BECN. And Beacon Roofing Supply firming up at its 50-day moving average. It's been a support level for quite some time, but it is up 1.1% to 31.22 ahead of earnings tomorrow before the open. Earnings of 60 cents a share would be up 7% from a year ago. Sales up 4% to $599 million. And we're also supposed to hear from Tiffany before the open tomorrow. Luxury retailer. Buyers have been coming into this stock ahead of earnings. It's back above its 50-day moving average, working on the right side of a base here. A lot of sellers in the stock in early November, but has bounced back nicely. Been a little bit of volume behind the recent move as well. Shares up 2% today to 63.88. And then after the close tomorrow, really interested to hear what Ulta Beauty has to say, because this is another one of these late-stage bases. Stock looks vulnerable to me, but it is a tough stock to bet against because they tend to really report nice numbers quarter after quarter. Ulta is up 1.1% today to 94.24. Again, reporting tomorrow before the close. Coming up next, the Tom O'Brien Show. Be sure to tune in to that. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon, everyone.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today,
because your journey to extraordinary rewards is just one click away.